Tesla is Cathie Wood's top holding in her ARK Innovation Fund, her flagship fund. And Cathie Wood joins us now exclusively. Cathie, it's so great to have you on the show. Thanks for being with us.
Thank you, Morgan. Happy to be here.
So much to discuss with you, but I do want to start with Tesla. Your reaction to those results we did get yesterday, and specifically the fact that the operating margin dropped pretty dramatically to 11.4%, certainly in focus for trading today. Does this change your outlook or your thesis around Tesla?
Not at all. In fact, curiously, we want Tesla to scale its units because each one of them now represents the potential for a robotaxi and a robotaxi fleet. Now, Elon says it's possible that he could launch that fleet this year. We think it's more like last year. But the robotaxi fleet is really going to be, or the robotaxi service is going to be, from a margin point of view, more like a SaaS business. And so we think that it's very smart to maximize units because they have so much option value now.
Yeah. I mean, but we've been hearing about the robotaxi fleet for some time. There's a lot of regulatory barriers to all of that, and certainly technological barriers involved too. So how soon can we actually see that realized? And given the fact that you tweeted earlier today that you've got a new valuation assessment of Tesla coming out, how does that fit into your price target for the stock going forward?
The price target for our stock, and I think it's just hitting now, for 2027, because we do have a 5-year investment time horizon, is our expected value is roughly $2,000, and that's within a range of $1,400 to $2,500, our bear and bull case. Now, just Morgan, on the regulatory side, I actually think regulations are working in Tesla's favor. For, I think, roughly 3 decades, the number of auto fatalities in the United States fell to the low 30,000 range per year. And they've turned around in the last 5 years and moved up to 45,000 plus. And I think the pressure is on the National Highway and Transportation Safety Association to change something. So it is looking carefully at Tesla's data. And during Investor Day, Tesla released some data that we don't think many people paid enough attention to. The most important one is that with full self-driving, a Tesla vehicle gets into an accident every 3.2 million miles. And that compares to 1 every 500,000 miles for the average car on the road.
Okay, so Cathie, hold on. Good afternoon. Yes. It's John Ford. I just want to clarify. Did you say a $2,000 per share price target? Tesla right now is under $200 a share. So yes. Even if you were to 10x that would be an over $5 trillion market cap. Is that what you're saying?
That is what we're saying. We think that the robotaxi opportunity globally will deliver $8 to $10 trillion in revenue by 2030 and is one of the most important investment opportunities of our lifetimes.
Okay.
And I think one of the reasons for that is it is going to save lives. 80 to 90% of auto fatalities and auto accidents are caused by human error. And autonomous driving is going to take away the human error, we believe.